Good day, students. This is the 2016 August question paper that I will be doing with you, and the paper was out of 70 marks as usual, and it's a 2-hour paper. And if we see question 1 of this question paper is out of 50 marks, which means it was a very important question to understand, and I will only be doing question 1 for this question paper only. It says ignore that in this question you are provided with the following pre-adjustment trial balance of traders on the 31st of December in the year 2016, being the last day of the financial year, that is the end of the accounting period. We are given capital, we are given drawings, we are given equipments as usual, and vehicles at cost. And very importantly, we are given accumulated depreciations of 480,000 rands and 560,000 rands for both equipment and vehicles on the 1st of January 2016, and both of them on the 1st of January 2016. This indicates that this accumulated depreciation for equipment of 480,000 rands does not include depreciation for the current year. Similarly, with the accumulated depreciation for vehicles, the 560,000 rands, it indicates that it does not include depreciation for the current year, because this is an opening balance on the 1st of January in the year 2016. So if you see here in the trial balance, once again we are given the allowance for credit loss on the 1st of January 2016 being an opening balance. This is the allowance that was calculated in the previous accounting period, being the year 2016, and the amount is 30,000 rands. And sometimes when it comes to the allowance, we might be given an allowance to calculate by the end of the year, or an adjustment for this amount of 30,000 rands. I'm just highlighting amounts that are important. We are given 12% loan from Dash Bank, and the loan was 800,000 rands. So now it means if you want to know the interest for the year on this loan, it will be 800,000 rands times by 12%. And if you multiply this by 12%, you'll get 96,000 rands, which is the interest that was supposed to be paid for the year on this loan. However, if you see here at the bottom, we already have interest expense of 80,000 rands. However, interest that was supposed to be paid is 96,000 rands, but we only paid 80,000 rands. Remember, this is the amount of the interest that was already paid. That means we paid 80,000 rands instead of 96,000 rands. That tells us that there's a difference between the two, and the difference will be an amount of 16,000 rands, and 16,000 rands will be recorded as accrued expense, will be recorded as accrued interest expense. So now any accrued expense, we know that it is a liability, and this will be recorded under the current liabilities in the statement of financial position. Let me move slowly with the next instructions. We are just given sales, cost of sales, insurance, operating expenses. Those I will just see them in the income statement. They are not important for explanation now. Under additional information, we are told under number 1 to provide for depreciation on equipment for the current financial year at 25% per annum on the diminishing balance method. That means equipment's depreciation is calculated at 25% using a diminishing balance method. Second, additional information says that provide for depreciation on vehicles for the current financial year using the straight line method of depreciation. So it means for vehicles we are calculating our depreciations using the straight line method. The business has 2 vehicles, of which the relevant details are given below. So now we have 2 vehicles, which is vehicle 1 and vehicle 2. and vehicle 1 was bought on the 1st of January in the year 2014. Remember, the beginning of the accounting period is 1st of January and the accounting period ends in December, as we have seen from the trial balance. And the cost of this vehicle is 900,000 rands, and it has an expected residual value of 300,000 rands and the useful life of 5 years. The second vehicle is vehicle 2, and we are told that vehicle 2 was bought on the 1st of January in the year 2014 at the cost price of 1,040,000 rands, and it has an expected residual value of 240,000 rands and the useful life of 5 years. So both the vehicles, they have the same useful life, but obviously the residual values are different. Under adjustment number 3, we are told that vehicle 1 was sold for 550,000 rands. This is the price at which this vehicle was sold. Remember, vehicle 1 is the one that was costing 900,000 rands on the 1st of January 2014 when the company bought the asset. This transaction has not yet been recorded. It means the selling or the disposal of this vehicle at a price of 550,000 rands was not yet recorded. It means we still have to do the asset disposal for this motor vehicle. Number 4 says trade receivables include an insolvent debtor of 40,000 rands. It means the amount of trade and other receivables that we have seen it in the trial balance, it includes the 40,000 rands. It means 40,000 is still included in the amount for trade and other receivables. We are told that received a final dividend of 25 cents in the rand. Remember, 25 cents is the same as 25%. So now it means out of the 40,000 rands of the debtor that was insolvent, we only received 25 cents or 25% of the 40,000 rands. And the 25 cents in the rand from the insolvent estate on the 31st of December in the year 2016, the current year. And the rest of his account must be written off as irrecoverable. And these entries have not yet been recorded. It means this amount of 40,000 of the debtor that was declared insolvent, which 25 cents was received, was not yet recorded in the books of the business. And if you say 40,000 rands times by 25%, we realize that 10,000 is the amount that was received. And if we only received 10,000, it means 30,000 rands was not received. Therefore, now the amount of 30,000 rands is the one that we are told that it must be written off as irrecoverable. It means 30,000 rands will be recorded as a bad debt. So we'll have an amount of 30,000 rands which will be affecting our bad debt in the income statement. Then now we can continue. Under number 5, it says adjust the allowance for credit losses to 5% of the outstanding trade receivables. So now we have to make an adjustment of the trade receivables, where we have to take the total amount of our debtors in the trial balance, and we do have our trade and other receivables as 720,000 rands. Therefore, now we have to say 720,000 rands. We subtract the amount of 40,000 rands of the debtor that was declared insolvent. Then we have to say 720,000 rands minus 40,000 rands. That will give us an amount of 680,000 rands. And we have to multiply this by 5%. 680,000 rands times by 5% will give us the new amount of the allowance for credit loss. Therefore, now it means our allowance for credit losses by the end of the year, they're supposed to be 34,000 rands. But if we go back again to the trial balance, we are seeing that 30,000 rands was already an allowance that was provided from the previous accounting period, the 30,000 rands. But now from the adjustment, we are realizing that our allowance for credit loss is supposed to be 34,000 rands rather than 30,000 rands that was estimated last year. So now it means our allowance must increase by the full amount of 4,000 rands so that it becomes 34,000 rands. From 30,000 in the trial balance plus 4,000 rands, that will be 34,000 rands of the allowance by the end of the current accounting period. So now let us just move slowly to the next adjustment. Next adjustment is number 6, where we are told that the insurance expense include a premium of 2,000 per month paid for the insurance of the owner's personal use or personal house and car. So that it means the amount of 2,000 per month, that means for the full 12 month, was for the insurance and the car of the personal house of the owner. That means this amount will be an amount of drawings. The insurance expense include a premium. It means in the amount of the insurance in the trial balance. In the amount of the insurance in the trial balance, this amount of the insurance, it include 2,000 for 12 months. That means 2,000 times by 12, which will give us 24,000 rands, is included in the amount of the insurance. Yet that is not supposed to be included there because any personal transaction with the owner are regarded as drawings. Therefore now this amount will have to be taken out of the amount of insurance. Then we have to say minus 24,000 rands. Then we record that in the drawings account when we do the statement of changes in equity. So now the next adjustment will be number 7. And number 7 tells that the loan was made on the 1st of January 2016. Therefore now if the loan was made in the beginning of the current year, it means the interest that we're supposed to pay for the full year. And it is repayable in 2 installments. The first installment of 400,000 rands has to be paid on the 1st of January in the year 2017. And remember, we are doing the books at the end of December 2016. So now it means 400,000 rands will be a current liability. This will be a current liability, and another 400,000 rands will be a non-current liability because our total amount of the loan is 800,000 rands. There we have the loan of 800,000 rands. So now if 400,000 rands is paid within 12 months, it means 400,000 rands of the loan is a current liability and 400,000 rands of the loan is a non-current liability. Number 8, which is the last adjustment, say that interest on the loan for the current financial year has only been paid until the 31st of October and provide for the interest payable for the rest of the year. So now it means the interest has been paid only for 10 months. Therefore now another way to calculate that, we can just say the amount of the interest that we have seen in the trial balance, and the interest that was already paid was 80,000 rands. So now if you say 80,000 rands, we divide that by 10 months because it has been paid until October, which is 10 months. That will give us the amount of the interest per month. Therefore now that means interest per month will be an amount of 8,000 rands per month. Then we times that by the number of months, which is November, December, times by 2 of the outstanding month, November and December. That will give us 16,000 rands. And 16,000 rands is the same as that accrued that I have shown you. Accrued expense, which is a liability, will be recorded under the current liabilities. I've already done that in the trial balance. So now these are the adjustments that were given in this question. So now we are going straight to the requirements. We are required to, under 1.1, we are required to prepare the general ledger accounts of colon traders for the year ended 31st December 2016, and we are required to do asset disposal, accumulated depreciation. 1.2, we are required to prepare the statement of comprehensive income, which is the income statement for the year ended 31st December 2016. And 1.3, we are required to prepare the statement of changes in equity for the year ended 31st December 2016. And 1.4, we are required to prepare the statement of financial position for the year ended 31st or as at 31st December 2016. And 1.5, we are required to do property, plant and equipment note. So now these are the requirements that are given for us. So now whenever we are given such requirements, it's preferable, I always prefer that students must first complete the template of all that is required. And 1.1, we are required to do the ledger accounts for asset disposal, which is this one, and the second one is the accumulated depreciation. However, I will also do the asset cost, which is the vehicular cost, because we will need that when we do the note. However, we're only required to do the two. And 1.2, we are required to do the statement of comprehensive income, which is the income statement. And I have recorded all the amounts that are already given, being the sales, cost of sales, other incomes. I already know that there is a profit on the disposal. Then after I listed all the expenses, and I have recorded all the amounts of the expenses that are already given from the trial balance. And if you can see that the credit losses from the trial balance are given to be 56,000 rands. And here is the amount of the credit loss from the trial balance. The amount of the credit loss in the trial balance is given there. We have credit loss 56,000 rands. Then we are again given the amount of the insurance 228,000 rands from the trial balance. I just want to confirm few amounts, the insurance. So I just took all the amounts as they are from the trial balance. Then now we can continue. The insurance is given, the other operating expenses, they are also given from the trial balance as they are. The amount for the other operating expenses, I've just took that as it is. Then after we continue, our finance cost is given to be 80,000, the one that is already recorded. Then after we'll make adjustments. Finance cost is given to be 80,000 rands. So I just took all the amounts as they are. So now after the income statement, we have the statement of changes in equity with a different color. Then from there, I have done the statement of financial position, which is sometimes called balance sheet, from assets up to current liabilities at the bottom. And I've done the same thing. I took all the amounts that are given from the trial balance as they are. So now in the trial balance, we had an amount of inventory as given, amount of trade and other receivables, and amount of cash and cash equivalent. And if you can see those amounts in the trial balance, they are also given. There is the amount of trading stock 430,000 rands, given amount of trade and other receivables, there is 720,000 rands, and the amount of the bank cash and cash equivalent, it is given to be 116,000 rands. So now it's always preferable or good practice that whenever you are required to do the financial statements, first record what is given from the trial balance. So now from here I can just move forward and do all the requirements per each adjustment. Then from this statement, I have also completed a template for the statement, or sorry, for the note, the property, plant and equipment note. So now I will just record all the transactions individually to where they belong. So now let me just go to the transactions, to the additional information. Now in the additional information, we were told to record or to provide depreciation for equipment using the diminishing balance method. It means we have to calculate the depreciation on equipment using the diminishing balance method. So now we have to know how much the cost price of the equipment, and the cost price of the equipment is 1,600,000 rands, and the accumulated depreciation for equipment is 480,000 rands. So now calculating depreciation on equipment for the current year. Remember, this is for the current year. So now for the current year, which is the year 2016, equipment will have to say cost. Remember, diminishing balance method, we say cost minus accumulated depreciation. So now the cost is 1,600,000 rands minus 480,000 rands, which is accumulated depreciation opening balance. Then after we multiply by 25%. If you say 1,600,000 rands minus 480,000 rands, that should give you 1,120,000 rands. Then we times that by 25%, then that will give us depreciation for equipment for the current year is 280,000 rands at the end of the current year. So now it means we already know how much is the amount for depreciation on equipment, and therefore we can immediately record that in the statement of comprehensive income under the depreciation for our assets, which is 280,000 rands. Remember, there is still another depreciation for vehicles. I can just say plus and leave that. Therefore now we only had one equipment. Then we continue with the second adjustment because the first adjustment has been taken into account. Then after we go to the second adjustment. Second adjustment says provide for depreciation on vehicles for the current financial year using the straight line method of depreciation. The vehicles has, or the business has two vehicles of which the relevant details are provided below. So now we had two vehicles, we must calculate depreciation for both vehicles. Vehicle 1 had a cost of 900,000 rands and with the expected residual value of 200,000 rands and 5 years of useful life. And remember, vehicle 1 was not sold, but vehicle 2 was sold. But vehicle 2, although it was sold on the first, that is vehicle 1 that was sold under number 3. Vehicle 1 had a cost of 900,000 rands and it was sold on the 31st of December at the end of the current year. It means we have to account for the depreciation for the full accounting period, which is the year 2016. However, vehicle 2 with a cost of 1,040,000 rands with the expected residual value of 240,000 rands and useful life of 5 years, it was not sold until the end of the year. So now it means we need to calculate depreciation for two vehicles, vehicle 1 and vehicle 2. So now I'll just have to take a picture for this so that I have it on record. So now from now we can move and calculate the depreciation for our motor vehicles for the year 2016. So now we have to say cost minus residual value. Start with vehicle 1. We say cost minus residual value 2016. The cost of motor vehicle 1 is 900,000 rands. The expected residual value for vehicle 1 is 300,000 rands minus 300,000 rands. That will give us 600,000 rands as the depreciable amount. We divide that by the useful life. Then we say 600,000 rands divided by 5. That will give us 120,000 rands as the depreciation for motor vehicle 1 in the year 2016. Then after we calculate depreciation for motor vehicle 2 for the current year, motor vehicle 2 has a cost of 1,040,000 rands, and with the expected residual value of 240,000 rands minus 240,000 rands, then 1,040,000 rands minus 240,000 rands, that divide by 5, that will give us an amount of 160,000 rands. Therefore, now that will be the depreciation for vehicle 2 for the year 2016. Shall say 2016. So now it means the total depreciation for our vehicles will be 160,000 rands plus 120,000 rands. That will give us an amount of 260,000 rands, 280,000 rands. So that is 280,000 rands total depreciation for both vehicles. So now we can immediately record that depreciation under the income statement as our depreciation for vehicles 280,000 rands. So now we know that all the depreciation have been taken into account, therefore now their total will be 560,000 rands. That was the second adjustment. Therefore now we have to take into account the second part of the second adjustment. We are told that vehicle 1 was costing 900,000 rands, residual value was 200,000 rands, useful life was 5 years. So now we have done that, and we have taken into account vehicle 2 that was bought on the 1st of January 2014. At this cost, expected residual value was 240, and we have accounted for depreciation for the current year. And under number 3, now we are told that vehicle 1 was sold for 550,000 rands. So now the minute this was sold, it means we have to dispose the asset and derecognize it from the books of the business. And it was sold on the 31st of December in the year 2016. And because of that, we have to sell it or calculate the carrying amount until the end of the year 2016. So now we have to take into account the cost of this asset, of which the cost of motor vehicle 1 is given to be 900,000 rands. And we also have to remove all the accumulated depreciation. So now whenever the asset is sold and you are told the price in which it was sold, of which in this case is 550,000 rands, immediately record that in the asset disposal ledger account. So now it means in this adjustment we will be dealing with the ledger accounts for the vehicles. So now let us immediately record that in the ledger accounts. I have already prepared the 3 ledger accounts, starting with the cost, and we know that motor vehicle have an opening balance always on the debit side, and we are given in the trial balance their cost, and the cost of motor vehicles is given to be 1,940,000 rands. 1,940,000 rands. Then after we record the cost of the asset that was disposed, asset disposal, and we know that the cost of motor vehicle 1 that was disposed was 900,000 rands, and immediately that 900,000 rands must be recorded on the debit side of the asset disposal, because for every credit there is a debit entry, and the contra entry will be vehicle 1, because it's vehicle 1 that was sold, and there was no vehicle that was bought during the current year. So now if there was no purchase during the year, let us check if was there any asset that was bought during the year. so that if there was an asset that was bought during the year, we can account for that. We are not told of any asset that was bought during the year, so now because of that there is no other entry to record. Therefore now we can close off this ledger account, or we can balance this ledger account, because it's an asset and it does have a balance at the end of the year. So now we say 1,940,000 rands minus 900,000 rands. The total is 1,940,000 rands. 1,940,000 rands. We subtract 900,000 rands, that will give us 1,040,000 rands. That will be the balance carried down, and the balance brought down still 1,040,000 rands. 1,040,000 rands, which is the balance that we brought it down. Then after we come to the accumulated depreciation ledger account, and we know that this ledger account always has a balance on the credit side. Balance on the accumulated depreciation is given to be 560,000 rands. There is the accumulated depreciation opening balance for vehicles, 560,000 rands. So we take that, we record it on the credit side as 560,000 rands. Then after we record depreciations for the current year. For the current year we had 2 depreciations, and the sum of those 2 depreciations amounted to 560,000 rands. We had 2 depreciations that amounted to 560,000 rands, but it was 2 assets. So now remember, now we are doing only depreciation for vehicles. So now we only have to record the amount of 280,000 rands, because vehicles depreciation for vehicles was 60,000 rands and 120,000 rands, but another one was for equipment, and we are only doing vehicles. So now we have to record 280,000 rands as the total of the vehicles, and that was an amount of 120,000 rands plus 160,000 rands. As you can see that from my calculations, the 120,000 rands plus the 160,000 rands, there is the sum as 280,000 rands. Remember, this ledger account is for accumulated depreciation on vehicles, so we only take into account vehicles, not equipment. Then now we have to remove all the depreciation for the asset that was disposed, and we know that vehicle 1 was disposed, and we know that vehicle 1 was bought on the 1st of January in the year 2014. Vehicle 1 was bought on the 1st of January in the year 2014, yes. If you see here, we are told that vehicle 1 was bought on the 1st of January 2014. Remember, January is the beginning of the accounting period. It means it was there 2014, 2015 and 2016. And by the end of December 2016, 31st December 2016, vehicle 1 was sold. So now it means it was there 2014, 15 and 16. That means we need to calculate depreciation for vehicle 1 for 3 years. So now because of that, it means we have to take into account for 3 years of depreciation, and we have already accounted for 2016. So now let us only account for 2014 and 2015. And 2014, remember, it will still be the same, because the depreciation for the full year we have accounted it to be 120. So now it means for 2014 it was 120,000 rands again, and 2015 it was still 120,000 rands, because these are the depreciations for the full year. Therefore now it means the total depreciation up to the end of the year 2016 for motor vehicle 1 that was sold will be a sum of 120,000 rands times by 3. So now if you add all the 3, that will give you 360,000 rands. So now this will be the accumulated depreciation for the asset being vehicle 1 that was disposed at the end of 31st of December in the year 2016. So now when we go to the ledger accounts, it means we have to record 360,000 rands on the debit side because we are removing the total accumulated depreciation for vehicle 1 from the credit side, and we are cancelling that on the debit side because we know that the depreciation for vehicle 1 for the year 2014-2015 it is already included in the opening balance, and for the year 2016 there we do have 120,000 rands. So now if 2 years is there and this is the third year, therefore now 3 years will give us 360,000 rands, as I have shown you in the calculations that 360,000 rands is the total accumulated depreciation from the year vehicle 1 was bought until the year it was disposed. And the contra entry here will be asset disposal. Then now we have accounted for the accumulated depreciation of the disposed asset, and after we have done that, we can balance this ledger account. And we take the total of the bigger side, 560,000 rands plus 280,000 rands, and the credit side will always be greater in this ledger account. You'll never have debit side being greater than the credit side, 840,000 rands. So now that means the balance carried down will be minus 360,000 rands, which will give us 480,000 rands. That will be the balance carried down, and the balance brought down will be the same amount, 480,000 rands being the balance brought down. Whatever was closing becomes the opening. Then after we do the last ledger account, for every debit there must be a credit. So now the fact that we have 360,000 rands that is debited under the accumulated depreciation and the contra entry is asset disposal, it means asset disposal must be credited by 360,000 rands, and the contra entry will be accumulated depreciation because that comes from the accumulated depreciation ledger account. Then after, remember I said that the price at which the asset is sold for must be recorded in the asset disposal ledger account, and we know that the price at which motor vehicle 1 was disposed was 550,000 rands, and here the price of 550,000 rands, and it was a cash sale or a cash disposal. Therefore now that must go to the credit side of the asset disposal, and the contra entry will be bank because it was sold for cash, 550,000 rands. Then after you have recorded that, we have to determine if have you made a profit or a loss on the disposal of this asset. So now we have to ascertain either we have made a profit or a loss on the disposal of this asset. Remember, to determine if you have either made a profit or a loss, you need to know the cost and you need to know the accumulated depreciation, so that will give you the carrying amount. So now it means, in other words, we need to know the carrying amount of vehicle A or vehicle 1, and the carrying amount is the cost of 900,000 rands minus the accumulated depreciation of 360,000 rands, which we have calculated here at the bottom. Then after we say 900,000 rands being the cost of the disposed asset minus 360,000 rands, that will give us an amount of 540,000 rands. Remember, 540,000 rands is the value at which this asset was disposed. Therefore, now we have to compare with the price at which this asset was sold. And we know that it was sold for an amount of 550,000 rands there on the right hand side. It was sold for 550, yet the value was 540,000 rands. It means we definitely made a profit of 10,000 rands. There's 50,000 rands being the selling price. Therefore, now the 10,000 rands is the profit. Because the value of the asset is the carrying amount being 540, but the price at which the asset is sold is 550,000 rands. Therefore, now 10,000 rands is the profit on the disposal of this asset. And immediately when you see that, you can immediately go to your income statement and you record the profit on the disposal of a particular asset. In this case, the profit on this disposal will be 10,000 rands recorded under other incomes. Then, after not forgetting that we were still busy with the ledger accounts, we go straight and we record the profit on the debit side, profit on disposal. Profit on disposal. And if you add the two, that should give us 910,000 rands. 910,000 rands. And asset disposal ledger account must always not have a balance. It must always not have a balance. So now this doesn't have a balance. Debit side is equal to the credit side. And from here we can immediately do the property, plant and equipment, because all the information that we need has been taken into account. So now from here I will immediately record property, plant and equipment note. So now in the property, plant and equipment note, we know that we start with the opening balances, and the opening balance come from the cost in the ledger account. In the ledger account, there we had an opening balance of 1,940,000 rands. Then we record that 1,940,000 rands as an opening balance. 1,940,000 rands, sorry for vehicles. 1,940,000 rands. Then we record the opening balance for accumulated depreciations, and that opening balance is 560,000 rands. We record that 560,000 rands. Then that will give us the carrying amount as the difference of 1,940,000 rands minus 560,000 rands. Then if you say 1,940,000 rands minus 560,000 rands, that will give us a carrying amount of 1,380,000 rands. Then we come to the movements during the year. Under movements during the year, additions, there was no asset that was added, but there were disposals at carrying value. Remember, carrying value of the disposed asset was 540,000 rands. There is 540,000 rands. So now we record 540,000 rands as negative 540,000 rands disposal at carrying value. Then we also record the depreciations for these assets being 280,000 rands. Then after the end of the year, we record the cost of this asset, and that is the closing balance from the ledger account. Closing balance is 1,040,000 rands, closing balance of the motor vehicle, and the closing balance of motor vehicle will be recorded straight in the PPE note. 1,040,000 rands. 1,040,000 rands. Therefore, now we also record the accumulated depreciation at the end of the year being 480,000 rands. This is for our vehicles. Then after, now we go to the column for equipments, and the column for equipment, we obviously start again with the cost of these assets, and the cost of the equipment is given from the internal balance as 1,600,000 rands. As you can see that there we have the cost of the equipment being 1,600,000 rands. So now we take that as it is, as 1,600,000 rands. And remember, there was no disposal for this asset, so when there's no disposal, there's no need for you to do the ledger accounts, because all the amounts are just given. There's little to adjust. And the accumulated depreciation opening balance for equipment was 480,000 rands. There is 480,000 rands. We record that as it is and make sure that it is negative amount. Then the difference between the two is 1,120,000 rands. That becomes the carrying amount at the beginning of the current year. Then after we come to the additions at cost, there was no addition, there was no acquisitions. Disposals, there was no disposals. Depreciation, there was the depreciation for equipment and it amounted to 280,000 rands. Then after, cost at the end of the year will be the same as the cost at the beginning of the year, because there was no disposal either, there was no purchase during the year. So now accumulated at the end of the year, you just say 80,000 rands, 480,000 rands plus 280,000 rands of depreciation for the current year. That will give you closing accumulated at the end of the year as 760,000 rands. Opening plus depreciation for the year will give you closing. Then after, carrying amounts at the end of the year will be 840,000 rands for equipment and 560,000 rands for the motor vehicles. So now we're just under the total column. That will give you the sum of 2,500,000 rands. Second total will give you 3,540,000 rands. The total for accumulated will give you 1,040,000 rands. And the total here will be 540,000 rands. And the total for depreciation is 560,000 rands. And this amount must be the same as the one that is in the income statement. Total of the depreciation in the income statement should be the same as that 560. And if you confirm that, our total depreciation was 560,000 rands. So it means our calculations are very accurate. Then from here we calculate the total of the carrying amounts, and the total of your carrying amounts should give you 1,400,000 rands. And total cost at the end of the year 2,640,000 rands. And the total for accumulated depreciation should give you 1,240,000 rands. Remember, the 1,400,000 rands must be recorded in the statement of financial position under property, plant and equipment, PPE. So now straight that can be recorded in the balance sheet under the PPE as 1,400,000 rands. 1,400,000 rands. So now another amount that has to be taken into account. Let us go again. Our adjustments have been all taken into account. Let us check the ledger accounts if everything been captured. In the ledger account, we have accounted for most of the things. So now we still need to account for the bank that was not yet recorded. This amount must still be recorded in the statement of financial position because it was not yet recorded. So now we have to record that. So now let us just account for this one in the statement of financial position. So here the statement of financial position, we add the 550,000 rands of the bank. Then in the bank account cash and cash, we say plus 550,000 rands. Then after we go and check again if is there anything that is still missing in our adjustments. In the ledger account we had 50,000 that was accounted for, 550. Okay, then this one is completely recorded. So now let us move slowly to the second or the next adjustment. The next adjustment is adjustment number 3. Adjustment number 3, okay, that one we have already done it again. 50,000 is recorded under bank. We are going to adjustment number 4. Adjustment number 4 says trade receivables include an insolvent debtor of 40,000 rands. So now it means this 40,000 was a debtor, and we received 25 cents in the rent from his insolvent estate by the end of December 2016, and the rest of the account must be written off as irrecoverable. And I have accounted for that, and I said it must be recorded under bad debts, and we said that 40,000 rands times by 25% is the amount that was received, and 10,000 I said that it must be recorded under bank in the statement of financial position. So now if we check that, it has to be added under bank plus 10,000 rands. So now if 25% was received, it means the rest of 30,000 rands is a bad debt. This is a bad debt. So if this is a bad debt, it means 30,000 rands must be recorded under bad debts in the income statement, and it has to be a plus under our bad debts. We say plus 30,000 rands under our bad debts. So now we have accounted for that. So it means now the full 40,000 rands is no longer a debtor, yet it is still included under trade and other receivables. Remember that 40,000 is still included under trade and other receivables, and 25% was received and 75% was a bad debt. It means the full 40,000 rands must be removed from our assets. That means from our trade and other receivables. We don't want to see that amount because it is no longer a debtor. Therefore now we have to subtract the full 40,000 rands because 10,000 was received and 30,000 is a bad debt. So now the full amount is no longer a debtor in the business. So now we have accounted for that in the bad debts, and we have accounted for that in the bank, and we have accounted for that under our trade and other receivables. The next one, now we have to do adjustment number 5. Adjustment number 5 says that we must adjust our allowance for credit loss to 5% of the outstanding trade receivables. And we know that our trade receivables amount to 720,000 rands before the 40,000 rands of the debtor that was declared insolvent was removed. So now when we calculate the allowance from the outstanding debtors, we first have to remove that 40,000 rands. Therefore now it means we have to say 720,000 rands minus 40,000 rands. That will give us 680,000 rands, which is the amount of the outstanding debtors, and we term that by 5%, and it will give us 34,000 rands. 34,000 rands is the amount that is estimated that it will not be removed, it will not be received from our debtors. So now the minute we estimate that this will be amount not received, therefore now it must immediately be removed from our trade and other receivables. So now the full 34,000 rands that we have calculated must be recorded as negative under our trade and other receivables in the statement of financial position. Then after, we have to make some adjustments now. Remember, in the trial balance there was an amount of 30,000 rands of the allowance for credit losses that was already recorded, and it was done that last year, hence it became an opening balance by the 1st of January 2016. So now 30,000 rands was already recorded. So now in the income statement we only record the difference of 4,000 rands. So now it means in the income statement we have to say 34,000 rands of the new allowance minus 30,000 rands. Then that means the amount that we estimate will be bad debts by the following accounting period will be an amount of 4,000 rands. Therefore, it means under the income statement we only record 4,000 rands under our bad debts. So now in the income statement we only have to say plus 4,000 rands, which is the difference of what was already recorded in the trial balance of 30,000 rands, which is less than what we have calculated. 30,000 was already recorded, the 30,000 rands, but the actual amount is 34,000 rands that we have recorded here, 34,000 rands. Then the difference becomes 4,000 rands that go to the income statement. So now we have counted for that both in the balance sheet and together in the income statement. So now we go again to the next adjustment, and the next adjustment is adjustment number 6, where they say the insurance expense include a premium of 2,000 per month paid for the insurance of the owner's personal house and a car. And we said that this 2,000 is the amount of the drawings that must be multiplied by 12 to give us 24,000 rands. And they say this 2,000 is already included in the insurance expense account. So now it means our insurance is overstated by 24,000 rands of the amount for drawings that were made by the owner for his personal house and car. So now it means the amount of the insurance must be reduced by 24,000 rands. That doesn't belong there because this amount is for drawings. So now we have removed that. It means when we do the statement of change in equity, this amount must also be taken into account as a negative. So now we go again to the next adjustment. The next adjustment tells us that the loan was made on the 1st of January 2016 and is payable in 2 installments. So now we know that it means 400,000 rands will be paid 1st January 2017, which is 1 year from the end of December 2016. So now anything that is payable within 12 months, therefore now that becomes, sorry, just 1 day, it's not even 1 year, 1 day, which is 1st of January 2017. So now just the following day is January, therefore now payment will be made. It means 400,000 rands will be a current liability. So now under our statement of financial position, we have to record 400,000 rands under the current portion of the loan being 400,000 rands. So now it means our long-term loan will also be 400,000 rands because the total of the loan was 800,000 rands. If you see in the trial balance, we had a loan of 800,000 rands. So now another portion will be paid 1st January 2017, another portion will be paid after that, so it's a non-current liability. Then we continue once again to the next adjustment. Remember, interest is not into account here. This is not for interest. Now they tell us under number 8 that interest on the loan for the current financial year end has only been paid until 31st of October which is the year 2016. And they say provide for the interest payable for the rest of the year. And we said 80,000 rands of the interest that was already paid, divide by 10 months, that gave us 8,000 of the interest per month. And it's only paid up to October. It means November and December for the interest on this loan was not yet paid. Then we multiplied that by 2, then that gave us 16,000 rands, which is the interest that is still accrued. It means the interest of 80,000 rands is underestimated by 16,000 rands. It means we still have to pay 16,000 rands. So now we go straight to our income statement. Then after we go to our statement of financial position. Under our income statement, we go under the finance cost. We say plus 16,000 rands, and that will give us 96,000 rands. Then we go to the statement of financial position, and we record under our trade and other payables, we record 16,000 rands, which is the accrued portion of the interest on a loan. Then after now, that was the last part of our adjustments, and I think I have covered all of them. So now I can just do my income statement throughout my equity and my balance sheet. Then I see how far we can go. Before we forget, let us first record that 24,000 of the statement of change in equity, the 24,000 rands, which was for insurance. This 24,000 rands, it was taken out of the insurance and it was transferred to the drawings account because this was drawings made by the owner. So now let us totalize our statements. Then we finally have to check if do they balance or they do not balance. So now we start with the income statement. We have our sales minus our cost of sales. That gave us 3,400,000 rands. And we have our credit loss being 56,000, 30,000 plus 4,000. That will give us an amount of 90,000 rands. And we have 224,000 rands, 228 minus 24,000 rands. That will give us 204,000 rands. Our other operating expenses, there was no adjustment, 1,380,000 rands. Our depreciation is 560,000 rands. And if we totalize all these four expenses, that will give us an amount of 2,234,000 rands. Remember, finance cost was not yet accounted for. So now it means we say gross profit plus profit on the disposal minus expenses minus 96,000 of the finance cost. That will give us profit for the year of 1,080,000 rands. And immediately you take that, you transfer to the statement of changes in equity as 1,080,000 rands. Drawings for the year will be 460,000 rands plus 24,000 rands. That will give us 484,000 rands. Remember, drawings are negative because the owner is taking money, and that reduces what the owner can claim from the business or the equity of the owner. Therefore, that will be 1,716,000 rands as the closing balance in the statement of changes in equity. And this closing balance must be recorded straight in the statement of financial position. So when we go to the statement of financial position, we must see that amount under equity as here 1,716,000 rands. Inventory, there was no adjustment for inventory. Then we can just record our inventory as 430,000 rands. And our trade and other receivables, it was only three amounts, 720 minus 40,000 rands and minus 34,000 rands. That will give us 646,000 rands. And our cash and cash equivalent was the sum of 116,000 plus 550,000 rands plus 10,000 rands. That should give you 676,000 rands. And the 3 will give us the total current assets. And total current assets should accurately give you 1,752,000 rands. And if you add the 2 with the non-current assets, it should give you total assets of 3,152,000 rands. 3,152,000 rands. Then after we come to our equity and liability, equity is coming from the statement of changes in equity. Liability non-current is 400,000 rands. Our trade and other payables is the sum of 620,000 rands plus 16,000 rands. Remember, this was the accrued interest expense. The interest expense not paid for November and December. That will give us 636,000 rands. Then we add the 2 current liabilities. That will give us 1,036,000 rands. And if you add current liabilities with the non-current liabilities of 400,000 rands plus 1,716,000 rands of the equity, that should give you 3,152,000 rands. 3,152,000 rands. So now if you see there, our balance sheet is exactly balancing with the figures that are accurate and correct. So now from here it means everything is balanced. Our statement of changes in equity and our income statement is complete. There you can see it throughout. This amount is the one that you see in the balance sheet. And from here we can say now the whole exercise has been completed, and you can see that we have covered all the adjustments and we have covered all that was required. Although here we added the assets, this was just my workings. I've just did the vehicles here. I've done that just as the workings. We have covered all the requirements in question 1. So now for this one I can end there and say thank you.